Hello, everyone. I'm James Forte with Forte Financial Mortgage Group, and I want to explain to our viewers and listeners how the free refinance program actually works. Our Triple F, which most of you have already heard and seen, and I thought it would be important to put a video together for our potential refinance borrowers and existing customers who we've gone over this program with. First and foremost, this program is free. When we say it's a no-cost refinance, we mean that. The amount of response we've gotten from our TikTok viewers and other social media platforms, most of it is, hey, it's too good to be true. There's no way it's free. You're adding the closing costs onto our existing loan balance, and we're just not paying it out of pocket at closing. This is the type of things that we get regularly, and I understand it. I truly understand it. When I say our refinance is free, I mean it's free. So the way it works is I'm going to give you a very specific example where we promote this. We say, hey, guys, when we're doing our purchase loans, we're saying, hey, customer, one of the things, aside from the fact that you're going to get the best deal from us today, we're actually going to refinance you for free. And what we mean by that is this. I'm going to use a $300,000 mortgage as an example, okay? So we actually started doing a lot of these this year already as rates have started to drop. So if you're interested in this is what's going to happen. So we say, okay, send us your current mortgage statement. You send us your current mortgage statement. We review it. We do our own due diligence. We have online methods of obtaining current values. There's a lot of things we do, and there's a lot of little stuff. So I'm not going to bore you with that part of it. The part that's important for you to understand is how is this really free and what's the catch? There's got to be a catch. It's a scam. There's no catch, and it's not a scam. So $300,000 loan, your existing principal loan balance is $300,000, okay? Let's say that, we work up a deal. Perfect example, we just closed recently this year, was a borrower that we had originally done a purchase mortgage for. We had given them a rate of 6.75% on a 30-year fixed. And, that was late last year. And so now they came back to us, said, James, we're interested in the free refinance. And we actually had reached back out to this client specifically and saying, hey, Mr. or Mrs. So-and-so, it's now time. Your free refinance that makes sense is ready. So we took the $300,000 loan balance. Their rate was 6.75%. We ended up getting that down to 5.899. It's a very unique rate. We gave them a 5.899 rate. Let's say the closing costs with underwriting fees, credit report fees, title charges, recording fees, those pieces, and we're going to talk about escrows next. I like to break it down this way. So let's say the actual cost to obtain the refinance between all of those things was $3,500. We're going to use $3,500, okay? Because that's about, give or take, what those costs would normally be. So $3,500 is the cost, and so if your costs are $3,500, we actually give you a lender credit. So on the closing paperwork, on the loan estimate, on the closing disclosures, all stuff that we go over with you through the process, you'll see credit $3,500. So in this case, the borrower had no escrows, okay, taxes, insurance. And this is the reason I picked this example, because it's easier to understand the moving parts without the escrows. We're going to talk about the escrows next. So his loan balance, the principal balance, was $300,000. It was a little different, but I'm just using these numbers to make it simpler. So if the balance was $300,000 and your closing costs were $3,500, normally what would happen is your normal bank or lender would say, okay, Mr. Johnson, we're gonna add that into your loan amount, and so it's not costing you any money out of pocket, and you're going to skip 2 months of mortgage payments, and the customers think that, oh, okay, this is a great deal. Well, the difference is we're not adding the $3,500. We're actually giving you a lender credit at closing. So your new loan amount is still $300,000 after you have closed, okay? So old balance $300, After we're done refinancing you, still $300. Your rate went from 6.75 in this example down to 5.899. So the point here is it was free. So if your balance was $300 when you started, and then when we closed, your balance was $300. Oh, by the way, there was 1 year in between these refinances. And one of the other things that we do with this free refinance is to say, hey, customer, if you want to keep your amortization where it is, we can do an odd term loan for you. So in this case, he had 1 year into a 30-year loan. And so we said, okay, how about we just keep you at 29 years? So we reset the new amortization on the new loan at 29 years. So now, not only did he drop the rate to 5.899 for free, we kept his amortization exactly the same, so he didn't have to even add any time. So that's just what he wanted. We could do whatever you customers want. So the point is, there is no downside. There's no negative piece. We devised this program to take all the guesswork out of refinancing. Most people have an opinion of, oh, it doesn't make sense to refinance unless you're saving X amount off the rate or X amount per month. And what is that? That's usually based on less positive experiences from refinancing with another lender or another bank, because the majority of all other lenders and banks are not doing what Forte Financial Mortgage Group is doing. They're adding money into your loan, okay? If you are interested in refinancing, you really, really should come to us. We make it simple. So if you want to do this, you give us a copy of your current mortgage statement, right? We take your current mortgage statement. We'll make a couple of assumptions, and we're going to tell you what those assumptions are. Like, your credit score is X, or better than, is excellent. They're 740 or above, whatever the assumption's going to be. We'll run estimates ourselves on value. Hey, your value is X, and we'll base it on those things, okay? Excuse me. And then we will run numbers based on that and say, hey, yeah, this makes sense because we can drop, even if your rate is only going down by 0.5%, if you're keeping your term the same and you are saving whatever, $200 a month, how's that not worth it to do if it costs you nothing? So our only requirement when we do these loans for our customers, because part of the reason we do this is we say, okay, you have to stay in the loan for 6 months before we could do it again for you. Okay, where we can give you those lender credits again. Otherwise, we can't do a free refinance at that point. So we have customers in an environment where rates start to come down, like specifically back in starting in 2019, when rates really started to come down. Some of those customers, we would literally refinance every 6 months. Okay, and it sounds like, oh, loan flipping, that's predatory. When it costs you nothing to do. There's no downside. You're not adding costs onto your loan. You're not incurring more money. There's no time where you have to stay in that loan in order for the long-term benefit of paying off those closing costs. That is what we do that is special. Our competitors are not doing this. So that's the basic moving parts on how the free refinance works. But what I want to expand a little more on this free refinance for our viewers who want to learn about this, we don't have to just keep your term the same. Some people, and this is the beautiful thing, everybody is different. Some people want their term to be, they want to stretch it out, back out to 30 years because they want to save a little bit more per month. And that's fine. That's okay. It's what's most important to the customer. Or some people say, you know what, James, this payment of $2,500 a month is fine. We have no issue with that. But if we could shave off time off of our loan and still make that payment, that would be more exciting for us. So maybe in that case, you say, okay, well, you have 27 years left on your loan, and we're dropping your rate 1%. But if we keep your payment where it is, you're going to save 8 years off the life of the loan. So now instead of 27 years, you're going to have 19 years left, but by making that same payment. These are the really creative things we do. We obviously make sure we're understanding what's most important to the customer, whether it's maximum monthly savings, whether it's just savings overall, and the payments are good, then in that case, we always suggest shorten your term, keep your payment the same. So those are some tools that we use. Now, guys, keep in mind, there's no catch here. There really is no catch, okay? And I understand because banks and mortgage companies, this is the standard way they refinance. You have closing costs. They add it onto your existing loan balance, and they give you a new loan that's higher with those things built in. That is not what we are talking about here, to be very clear. It is extremely unique. Yes, does Forte Financial Mortgage Group make money when we do this? Yes, not a lot, albeit, but enough that it makes sense for us to do, and we have more customers. I'd rather do 10 loans, and make less money on those 10 than one or two, and charge people a lot. We're a smaller mortgage company that we don't need to pay all the employees and all the staff that we have. We're very efficient on our resources, how we work, how we process loans, how we underwrite, and we're as fast as they come. We have start to finish a lot of these specific conventional type of refinances that we've been doing. We have closed in start to finish in less than 10 days because most of the time we don't even need an appraisal. That's the other part of this that people say, oh, I don't want to go through the hassle. There is no hassle on the majority of our, if you're a conventional, pretty straightforward type of borrower with good credit and nothing crazy in your profile, it's very simple. You submit your online application to our state-of-the-art website, which you'll take maybe 5 minutes to do that. From there, you can securely upload the document list we need, which is typically just most recent pay stub, most recent bank statement, copy of your current mortgage statement, copy of your homeowner's insurance declarations page, and a driver's license. That's the majority of all we're going to need from you, okay? Now, once we get that, if something comes up that we need, we'll ask you. But that's pretty much it. We set you up, we lock your loan, we send you e-disclosures, you e-sign those disclosures. Once we have that, you actually go into underwriting, assuming you've sent us that short list. Within 24 hours, we're issuing a loan commitment from there in most cases. And, then you're closing whenever it's convenient. We send our title agent out to your house or place of work or wherever is convenient for you at a time, even in the evening hours. Saturdays are also possibilities. And you sign. You're done in 30 minutes. Sometimes it's faster than that. That's it. It's really that simple. That is our process, unless there's, like I said, more moving parts. Things happen where stuff comes up in underwriting that's unforeseen, and it takes a little longer, but that's not the norm. So that is basically how our program works. I do want to continue now for those viewers that want to understand, escrows and taxes and insurance. You can continue listening because we're going to talk about that part of it now in the video. Escrows are always what throws people off. When people see a loan estimate, they see, oh, well, my closing costs are $10,000 here, but my lender credits are only $3,500. You lied to me, James. You said it was free. We get this a lot, but this is also why what I explain this in these cases up front to people, that what's free is the actual cost to obtain a loan. Underwriting fees, credit report, appraisal, if there's needed one, attorney, title, recording fees. Those are your costs to obtain the loan. You will pay taxes and homeowner's insurance, regardless if you the same amount of them, regardless if you refinance or not, okay? So let's make that really clear. When you pay off a mortgage and you set up a new one, you have to reestablish a new escrow account, okay? So that means that there's money due at closing for the new escrow account to set up your new taxes and insurance escrows, okay? So typically it's about 6 months. Call it on average 6 months of both. So, in this example where we said, you'll see closing costs $10,000 and lender credits of only $3,500. Well, it just so happens that 6 months of taxes, 6 months of insurance, and a few days of interest on the loan all add up to $6,500. But those aren't costs to obtain a loan. So there's multiple ways we deal with that with borrowers, and it's really what's most comfortable for the borrowers. So typically, let's say you have $6,500 that we need to take at closing, okay? you're going to skip on average of 1 to 2 months of actual payments due, depending on when you actually close and when the last payment was made. So between the skipped payments that you would have had those months to pay into escrow, right? So let's say the timing is it's December 15th, okay? You're closing December 15th, and you made your December payment, okay? So now your next payment would have normally been due in January. So if we close in December 15th, your first payment is actually not due until February 1st, okay? So that's a payment you would have made, okay? So that's 1 month of tax insurance right there that you're not making that you would have made if you didn't refinance. Now, in your escrow account right now, your existing escrow account, you should have a good amount of money in there that is going to be refunded to, unless there was an issue where your tax insurance went up and you have an escrow shortage, okay? So that's a situation that your escrow is going to, if you don't refinance, is eventually going to go up, and probably more than it should be, because now you have to play catch up. So it's a problem that we deal with all the time. So in those cases, the borrower can opt to say, hey, well, you know what, James, since we're going to skip the January payment of $3,000 a month, right? We're going to skip that payment. We have another $4,000 sitting in our escrow account right now, knowing that we're going to skip that payment in January, and we're going to be refunded our current escrow money within, the average is about 2 weeks after we pay off the loan. So figure by the end of December or the very beginning of January, the customer will get that $4,000 refund back from the existing escrow account. So between the January payment they skipped of $3,000 plus that $4,000 escrow refund, that's $7,000. So like, James, we're good with bringing the $6,500 difference for those escrows to closing now, knowing that we're not making that payment in January, we're getting the $4,000 back. And so it's really still was actually a net positive in this case to the borrower, where after everything was settled down and washed, they actually paid less out of pocket as well, even though they brought $6,500 to the closing in this example. A lot of moving parts, okay? That might be confusing, but don't let that discourage you if you don't understand that, because it's the most time-consuming part for us at Forte Financial when we do the free refinance with escrows is, I mean, we have a book-long email that we're going to send that's going to break down every single piece of this that we send to the customer to explain exactly how it's going to work. And then we go over that. Some customers are great. It makes perfect sense. I'm all set. Some customers, James, I'm so sorry. We just really don't understand what you're talking about. This doesn't make any sense. No problem. We will pick up the phone. We will call you. We always prefer to put it in writing. So it's in writing. So there's always a reference point back for the borrower and for us. So we know. But with that, then we can go over it on the phone. We explain it and we can make adjustments. You say, you know what? I don't really want to bring that money to closing. I know I'm getting it back later, and I know I'm skipping a payment, but hey, I'd rather have that money in my pocket to do something else with, maybe pay off a debt. Maybe, there's an expense coming up. So you can kind of use it as an opportunity as well. Again, every shoe is different for every person. Not everyone fits into the same pair of shoes. That's why this is an open-end thing. But the point here, before we wrap up this free refinance video, is that our refinance is free. And when we say free, we mean no cost to the borrower. Now, no cost other than what you would be paying if you didn't refinance. Again, very clear. Escrows, you're paying those whether you refinance or not. So no, we're not giving you a credit to pay your escrows for you. No, we do not do that. We give you a credit to pay your actual cost to obtain the loan. Very different, and we go over that in detail. So if you'd like to see what that looks like for you and your loan scenario, the best thing to do is to reach out. Go on our website, fortefinancial.com. You can click on the free refinance link. It's up on the taskbar up top. You can send an email to info@fortefinancial.com. That's the best way. If you send us an email, info, would suggest just attach a copy of your current mortgage statement and just some notes in there. It says, "Hey James," or "Hey, Forte team," depending on who's going to handle your case. This is my statement. I'm interested in your free refinance program. What you can do for me. Again, we're not going to pull your credit or anything up front, unless if you have something you want to share. Say, "James, guys, my credit's perfect. This is what I'm looking for. I just need to save as much as I can, but I don't want to incur any closing costs." Whatever. Just some basics. We will run numbers based on that. We're not going to call and harass you. We are not this high intense, sales. Let me call and hammer these people. We don't do that to our borrowers. We're going to get back to you when we prefer to email it to you, so things are in writing, and then we again go over it on the phone, talk about it, and if it makes sense, we're going to tell you, "Hey, Mr. Johnson, this absolutely makes sense because A, B, and C." Or, how many times we get a statement say, "Hey, thanks for reaching out. Unfortunately, this doesn't make sense for you because, A, B, and C," whatever the reason is, and we'll give you what those reasons are. So reach out today, fortefinancial.com for more info, info@fortefinancial.com to email us and see what we can do. Thank you so much. We look forward to helping you save money.